Imagine waking up one morning and finding out that your country's credit card is maxed out. We're talking trillions of dollars of debt, interest rates squeezing every corner of government spending, and no obvious way out. Then, the president walks in and says, "We're going to pay down that debt, not with more borrowing, not just with taxes, but with Bitcoin, crypto stockpiles, gold reserves." Sounds radical, surreal, maybe even impossible. But this is what Donald Trump and his administration are proposing. A plan to use crypto and gold, not just as investments, but as core pieces in the strategy to rescue the US from its debt spiral. Buckle up. This is not a "we'll do more of the same" plan. This could be a financial moonshot. Where we are, the US debt crisis. Let's set the stage first, because to understand how bold Trump's plan is, you need to see how bad things are now. The United States owes over $35 to $40 trillion in national debt. Some estimates put it at about $37 trillion. This includes everything: infrastructure, defense, entitlements like Social Security, Medicare, and interest payments. Interest on that debt is one of the fastest rising expenses. Every year, trillions are paid just in interest, meaning less money for education, roads, research, social safety nets. Inflation, borrowing costs, foreign policy mishaps, trade imbalances, all of it feeds into a vicious cycle. More debt, more interest, more borrowing, more vulnerability. The question being asked more and more by analysts, voters, and even politicians is, what's the escape route? Raising taxes? Cutting budgets? Neither seem to be politically popular. So unconventional ideas are getting airtime. This is not just about accounting, it's about trust, confidence, the reserve status of the dollar, the willingness of foreign governments and investors to keep buying treasuries. When confidence erodes, your borrowing cost goes way up. The stakes are high. Trump's new plan, what it is. Okay, so what is Trump proposing? What are the pieces of this plan that involve crypto and gold? Let's break them down one by one. A. Strategic Bitcoin reserve and digital asset stockpile. In March 2025, Trump signed an executive order creating a strategic Bitcoin reserve, plus a U.S. digital asset stockpile for other cryptocurrencies. The reserve is built using Bitcoin and other cryptos seized by the government via criminal or civil proceedings. That means the government didn't spend taxpayer dollars to buy them. So this part of the plan is budget neutral. These assets are to be held as stores of value, not for immediate sale. Think of it as a digital Fort Knox, a hedge against inflation, currency devaluation, and risks in the traditional monetary system. B. Stablecoins and treasury-backed tokens. There is a plan via World Liberty Financial, a crypto venture connected to the Trump family, to launch USD1, a stablecoin fully backed by U.S. treasuries, dollars, and cash equivalents. This stablecoin would theoretically allow for more seamless use of digital dollars in cross-border transactions, as well as commercial and institutional use. Having a token that's backed by treasuries means tying into existing assets of the U.S. government, rather than creating new liabilities. But regulatory, technical, and trust questions remain. C. Gold and gold green cards. A more unusual idea: gold green cards. The concept floated by Commerce Secretary Howard Lutnick. The idea: issue a limited number of gold green cards, paths to citizenship, priced very high, to raise massive revenue. Lutnick claimed that by selling around 200,000 of these cards at approximately $5 million each, you might raise $1 trillion to help pay down the debt. Also, the U.S. has long had gold reserves. The notion is that gold remains a time-tested store of real value, immune to many of the problems fiat currencies face: inflation, political interference. So incorporating gold more directly into the strategy is appealing to many conservatives, investors, and those worried about fiat dollar weakness. D. Rewriting reserve rules and monetary policy. Trump's proposal, or floating ideas, also includes changing how we think of reserves, potentially sacrificing, or at least sharing, the US dollar's status as sole reserve currency and pairing it with gold or crypto. Some talk of backing the dollar more explicitly with fixed value assets. There are also calls to re-examine how monetary policy is done, how regulation is applied to crypto, and making the US more welcoming to digital asset companies. Why crypto and gold? What's the rationale? If you hear about using Bitcoin or gold to fix government debt, it sounds wild. But people who support the plan say there are reasons. 1. Fixed supply and store of value. Bitcoin. Unlike fiat currencies that can be printed more, Bitcoin has a fixed supply. Supporters argue that gives it defensive power against inflation. If the dollar loses value, holdings in Bitcoin could retain value, thereby hedging losses. Gold. Historically, gold has been seen as a refuge. In times of economic instability, gold has maintained purchasing power. 2. Raising assets you already own. By using forfeited crypto assets, e.g., seized in criminal cases, instead of issuing new debt or raising taxes, the government gets value without spending more. That's appealing. 3. Diversification and risk mitigation. Right now, the U.S. government's reserve assets are heavily centered on dollars, treasuries, foreign currency reserves, and gold. Adding digital assets creates diversification. If something goes wrong with the dollar, or if interest rates, inflation, or foreign competition weaken its dominance, crypto/gold could be fallback assets. Could improve global confidence in U.S. policy if people see the U.S. as hedging, preparing for scenarios, e.g., if fiat currencies get devalued, if inflation runs wild, or if geopolitical pressures mount. 4. Political and strategic signaling. It's a way of sending a message. We're not relying purely on trust in paper debt. We're bringing in tangible, high-value assets. For some voters, this can sound like financial realism. Stop printing money, stop overborrowing, etc. It taps into populist concerns about inflation, fiscal irresponsibility, and decline of the US dollar. 5. Potential revenue generation. The gold green card's proposal is explicitly revenue-raising. If real, that could inject huge sums into the treasury. Stablecoins backed by treasuries could also see broad institutional adoption, transactions volumes, possibly fees, etc. The challenges, risks, and counterpoints. Of course, for every potential upside, there are serious drawbacks, technical logistical problems, and political risks. Let's walk through those. 1. Volatility. Bitcoin and other cryptos are notoriously volatile. Their value swings wildly. If part of national strategy hinges on assets whose value can drop by 20 to 50% quickly, that's a big risk. Gold is more stable, but far less liquid in some contexts, and gold reserves only go so far. 2. Regulatory, legal, and institutional barriers. Cryptos, stablecoins, digital asset policy are still underdeveloped in terms of regulation. Questions about auditing, security, custody, fraud, market manipulation, legal classification, are tokens securities or commodities, remain. Also, international treaties, banking regulations, central banks globally might push back if the US pivots heavily into crypto/gold backing in non-traditional ways. 3. Political pushback and market confidence. If markets believe the government is moving away from standard monetary frameworks, e.g. implicitly backing dollars with crypto or gold, that could unsettle investors, creditors, foreign governments holding U.S. treasuries. Risk of capital flight, weaker demand for treasuries, higher interest rates. Domestically, critics will say this is gimmickry, populist showmanship, not serious fiscal discipline. The underlying spending and obligations aren't addressed. Taxes/entitlements still have to be dealt with. 4. Accounting and transparency issues. How do you value seized crypto? What's the accounting standard? How often do you revalue? What if the crypto price tanks? Also, there are costs, secure custody, auditing, the risk of hacking, regulatory compliance costs. 5. Philosophical and currency system risks. The idea of backing national debt or stabilizing a fiat currency with digital assets is relatively new territory. Does this start to blur lines between fiat and hard asset currencies? What if Bitcoin or certain cryptos themselves lose credibility due to regulations, quantum computing, competition? How this could work in practice? Let's think operationally. If this plan is fully implemented, what might it look like on the ground? What steps would need to happen? 1. Inventory and audit. Government audits existing crypto holdings. What's seized, what's been sold, what remains. Assess value, security, risk, legal status. 2. Secure custody and governance, ensuring the crypto reserves are stored securely, cold storage, secure custody, protected from theft, political interference, or mismanagement. Clear rules for when if the government can sell swap revalue. 3. Legislation and regulation. Congress likely needs to codify aspects, backing stablecoins, defining digital asset reserve roles, clarifying monetary policy implications. Regulators, SEC, Treasury, etc., need guidance on classifying tokens, supervising stablecoins, etc. 4. Gold reserves and gold-linked instruments. Possible audits of gold holdings, maybe increasing purchases, issuing of gold green cards, if that idea is pursued, including legal framework, immigration policy, due process. 5. Communication to markets and public. Very important, explaining clearly what the plan means and doesn't mean, e.g. not returning to a full gold standard, not abandoning fiat completely, not immediate solution. Manage expectations. Ensure that bond markets, international investors, are reassured. 6. Risk buffers and exit strategies. What to do if crypto prices crash, if gold price fluctuates, if stablecoin adoption lags. Maybe built-in mechanisms, stop-loss policies, regular rebalancing, limits on exposure, alternative views, and what critics say. It's important for curiosity to hear the other side. Let's look at what skeptics are saying. Some economists argue this plan is largely symbolic. Crypto reserve or gold doesn't reduce actual obligations like Social Security, defense, healthcare. The biggest part of debt is future promises, not just what's been spent. Others warn that this could create moral hazard, allowing the government to avoid tough choices by relying on financial magic. There's also concern that overdependence on volatile assets could worsen crises. Example, if crypto markets crash, the reserve loses value just when it's needed most. Internationally, currency markets may react badly if the US appears to be moving away from transparent monetary policy or tries to redefine reserve standards unilaterally. Why this might be a game changer. Despite the risks, this plan has the potential to shift fundamental assumptions. Here's why it deserves serious attention. Break from the status quo. Most proposals about US debt focus on spending cuts or tax increases. This adds asset-based solutions. It forces us to think of national assets, not only liabilities. Emergence of digital assets and sovereignty. Using crypto as a national reserve asset changes the narrative of digital currency being only speculative or fringe. It positions the US to lead globally in a digital financial future. Potential for long-term credibility. If well executed, this could strengthen confidence in the US dollar by showing a diversified base, not just promises backed by debt. Inspiring financial innovation, new stablecoins, new reserve models, new uses for seized assets could trigger broad change in how governments handle assets in the modern age. Why this could be history. Here's why this matters, not just politically, not just economically, but historically. What we might be witnessing is a turning point in how modern states deal with debt and currency. For centuries, fiat currencies and government bonds have been the bedrock of monetary policy. Gold has been part of that, but largely sidelined since the gold standard era. Crypto until recently was mostly speculative, often dismissed by governments. Trump's plan connects all of these: gold, crypto, stablecoins, traditional debt markets. It's an attempt to build something new out of old tools. It's bold, it's risky, it might fail dramatically, but even as an idea, it forces us to reimagine money, value, debt. And when ideas of that magnitude are on the table, the world listens. We are at a crossroads. One path is business as usual: mounting interest, rising debt, eroding confidence, inflation, risk of crisis. The other path is experimental, risky, but possibly the only way to push back against the weight of trillions in debt. Trump's plan to use crypto and gold isn't just fiscal policy, it's a statement. Which path will win? No one knows yet, but you should watch. Because what happens here affects your savings, your taxes, the value of your dollar, and potentially the future of money itself. If you found this video eye-opening, hit subscribe so you don't miss what comes next. Share this with someone you know who's skeptical, curious, or just wants to understand where the world is heading.